My friends, welcome back to the show. A lot of you DM me, and the question really is how to trade this bull market. Whether you have $1,000, $10,000, $100,000, and there's been a lot of questions, a lot of comments, a lot of DMs. So today I decided to come to you and show you exactly how you can trade with $1,000 up to $10,000 to $100,000 portfolio, and show you exactly what strategy I use, hands-on strategy I use every single day to trade small accounts up to big and manage big accounts to get even bigger. If that sounds good, smash and obliterate the like button. I'm so happy to be back here. I've been on holiday for quite some time now. It's so cool to see everybody here. There's a lot of things to talk about. This is my first show since I'm back, first live. Oh my God, I've been waiting for this. So it's actually quite cool, and I'm very happy to be here. And a lot of things to talk about other than the fact that I'm going to show you how to trade these portfolios. What I'm also going to do, I'm going to show you exactly what happened. I'm going to talk about 𝗙𝗘𝗙𝗙 because I got a lot of comments. I got a lot of questions about why this dump from about 9 million down to like 2.5 million yesterday happened, and what is the reason behind, and what is going to happen with 𝗙𝗘𝗙𝗙 and the whole thing behind that. And I'm also going to take some of the questions that you asked me. So I said, what is the most burning question you want me to address tomorrow? So I know a lot of you have spot bags that you don't know what to do with. A lot of you are expecting a dump. A lot of you are expecting a pump. And most importantly, again, going back, is that I wanted to show you exactly how to trade your portfolios. Now I see we put up a vote. So if you're voting, make sure to do, because we're going to see the results here. And 52% of you have $1,000 portfolio, about $1,000, and about 38% of you about $10,000, and about 10%, which is quite cool, $100,000 portfolio. So we need to address these, and I am going to do that. Let's jump into it. Number one, most important, how does the market do, by the way? Markets are doing great. So I've left the market pumping, and I said that there will be some kind of pullback. I said that we should load up on. I actually let you know on what tokens I'm buying on X. Shared my portfolio as well, and we're massively up. I actually just tweeted about it. My TAI position is up 500%. Have you seen it on 10x leverage? That's like 50% since I told you guys to buy TAI. But if as you see, the market is undecisive, and we got WIF is down 20%, AIR down 20% on the week. So we have some things to look at. Let's jump into it. Number one, because most of you have $1,000 portfolio, that's what we're going to talk about. So couple of things to understand here. Number one is as your portfolio size grows, your risk will diminish and your involvement in the market. Now, there's a very good question. The question is, do you want to make money or you want to trade? Because for me, when I started trading, I wanted to trade. I was all about trading, and let's trade and buy and sell and this and that, and it's cool. But I'm actually all about making money. So what do I mean by that? What I mean is that if you're about making money, your involvement with the market is not directly, and the time spent in the market is not directly correlated with the money you're going to make. So more trading doesn't mean you're going to have more money. But when you have a smaller account, you will need to take one, much higher risk, and two, much more trades to be able to grind that account back. Why? Because let's assume you have $1,000 account and you're doing $1,000. You have $1,000 account and you want to ride that up to $5,000, $10,000, $20,000 deal bull market, right? It will be pretty difficult to pick the right coins to pull a 5x, 10x if you want to do it on spot. I'm not saying it's impossible, but making $100,000 from $1,000 portfolio this bull market without risking we're taking insane risk is quite difficult. So what do? Well, you go to trading and you actively trade the market. Now, when you actively trade the market, you still have risk, but it's a much more different approach than to risk than just put it on spot and hope that the project performs and it pulls a 5x, a 10x, a 20x. Especially if you want to make a 10x, 20x this bull market and you just want to put your money in and just wait on spot, it will require you a lot of belief that the project is going to pull a 20x. Why? Because you can't put $1,000 into Solana and wait for it to pull a 20x this bull market. It's just simply not going to happen because of the FDV, because of everything that is happening over there. So you need to pick lower cap coins, but lower cap coins has less proven track record. You don't know much about the team, so it's much more riskier to do that. This is why I say that the most reasonable thing to do with $1,000 portfolio is trade. The question is also, everything I say obviously is not financial advice. You do you. I'm just sharing with you how I grinded $1,000 portfolio up and how you can potentially do the same. So let's look at the charts. Number one, as I said in the beginning, is that when you have $1,000 portfolio, look what I got for myself. Look at this. Ren doesn't watch my show, but if he would see this is what Ren is pushing. And I've seen it in the office. He's always like doing this. I don't know if you watch Rand's shows, you hear this, and if you were with him on a meeting, whatever, you hear this. But I had to get myself one. So it's actually incredible. I don't know. Do you guys use any of these things? It's actually quite incredible. It's like an ASMR. It's pretty cool, bro. It's pretty cool. It's insane, hey? It's very good. Anyway. The ticker is 𝗙𝗙𝗙𝗙. We're going to talk about it. Smash the like. 𝗙𝗙𝗙𝗙 is true offer. Thank you so much. I see the LFGO community in the house. LFGO, much love. I'm going to talk about you guys. I'm going to talk about you. Santa on Sol. Okay, cool. Sorry, AI. Yes, Tai, actually, this is a 500%. Miss you, my man. Hassan, I missed you too. It's so good being back here. So, also before I jump, should we do the giveaway? Like, do you guys want a giveaway at the end? Should we do it? Did you see that someone accused me on Twitter yesterday that I'm not giving away the wallet that we got? Someone is like, we have a wallet that people send, LFGO community sent a shit ton of tokens, and I'm giving it away on my shows. So anyway, okay, cool. So let's jump back in here. Let me share with you the strategy, because I know a lot of you are excited about the strategy. So it's going to be pretty cool. The strategy is very simple, but one thing you have to understand is if you have $1,000, it might seem like a lot of money, but if you want to make $100,000 from it, it's going to be very, very difficult. So most important thing is set realistic targets. How do you do that? One, you have to figure out how much money you actually need to be able to trade. So for example, $10,000, I think it's a decent amount, and you are able to make 5 to 10% easy on trading, whether it's the bull market, whether it's the bear market. So if you need $1,000 living, you need about a $10,000 account to trade for a living. You know what I mean? So if your goal is to get to $10,000 from $1,000, you need a 10x, right? So to achieve that, you will need to take risks. The reason why I would recommend take at least a portion of that $1,000 and trade with it rather than just put it in a coin and just wait for it to go up, if the goal is to make $10,000 and not just make a 3x, 4x, because if your goal is to make a 3, 4x, there's no reason to start trading with it, right? So, but if you want to make a 10x, 20x, 30x this bull market, which is absolutely possible, the way to do it is to use high frequency trade, trade very, very frequently in and out of the market. One, it will require a lot of time from you, but it will be very, very lucrative if you do it right. Let me share with you the strategy I use to run up a small account into big accounts. So the most important thing is you have to understand market structure, right? If you use indicators and whatever, fine, that's not me. If you follow my content, you know that I trade based on market structure. I sometimes use volume, but I don't use any indicators, crazy lines, all that stuff for shit or whatever that is on my charts. It's actually a quite simple strategy once you understand it. But very important is market structure. Market structure means you have a low point, you have a push, and then you have a pullback, a retrace. This pullback has to come at least 50% on the way. How do you measure it? You take a Fibonacci tool, which you can find here on the left, and you pull it from the bottom, you pull it from the top. This is probably not how it's going to look for you. So it will be like a fib with all the colors and everything. You double click on it, and you can leave in the 0, the 0.15, and the 1. And once you leave it in, you get the 50% level, and that is considered a pullback. Now, once you've done that, but also guys, very important, like if you are new and you don't know who I am and you're thinking, who is this crazy dude? This is me. You can find me on 𝗙𝗘𝗙𝗙𝗪 every single day, by the way. I'm doing these live shows. I'm keeping you up to date with the news, what happened the past 24 hours, what will happen the next 24 hours. But if you want more of these trading off, I share everything with you here. For example, when the big dump happened in July, I tweeted, you will regret not buying 6 months from now. You will feel horrible for not buying Bitcoin at 56,000, Ethereum at 3,000, Solana 125, ton at 6.6. So all that, I'm tweeting all this thing, and I give you everything I know, and I help you guide have to navigate through the market. So if that sounds good, make sure to follow me next. There's a link in the description. And come to 𝗙𝗘𝗙𝗙+, obviously come to 𝗙𝗘𝗙+. But going back to the strategy. Now, once you have a 50% pullback, you are waiting for a next leg up. Then you have a market structure, right? So you have a proper market structure here. Why? Because you had a pullback, you had a push. What do you do now? You're waiting for another pullback. And now, because you listened previously when I said, you know where the pullback is coming. The pullback is coming to the 50%. Perfect. Now, what do you have? You have 4 points of structure. You have a low, you have a high, you have a low, you have a high. This is 1, 2, 3, 4. This is an established trend. Okay, now you know that the trend is up. If I boiled this down, right? If I boiled this down here, how would this look on the 15-minute chart here or the 5-minute chart? I have 1, I have 2, I have 3, I have 4. The only problem is this didn't come back 50%, right? So I'm still waiting for that 50% dump down here. This is what is going to happen here as well, by the way. You're waiting for the 50% pullback, and once that happens, you confirm that the market is trending on the 5-minute as well. But the whole idea, and I know it might sound complicated, but I promise you this is the simple part, and it's going to be extremely simple. Once you establish the structure, the only thing you want to do is you want to wait for a pullback and wait for something that's called a market structure shift, okay? Don't get scared. It's super easy. I promise you. Okay. And if you want to make it in trading, it's not like look for a cross and then you're going to be rich. It's not how it works. Okay. I'm just telling you honestly because I lost a lot of money. I on one of my vlogs, actually, I talked about it. I lost $250,000 before I became a profitable trader. $250,000. So the reason why I dedicated my entire life to helping you guys get up to speed with crypto and get up to speed with trading is because I know how painful it is to just lose and lose and lose, and you make money and you think that you made it all and then you lose it all again. It's shit. So I hope that you take this advice and I hope that you listen to it and I hope that you can implement some of it. So, and obviously, if this is shocking news to you and you haven't seen any of my vlogs, check it out. Again, there's a link in the description. The $1 Billion Hustle. It's a weekly vlog of my life that I'm putting out every week. So when you have the 50% pullback, you're waiting for a market structure shift. What is a market structure shift? The market comes down in waves like this, right? It comes down, makes lower lows and lower highs. This is a low, this is a high. This is a lower low because it's it's lower than the previous low, and it's a lower high because although it's a high, it's still lower than the previous high. So lower low, lower high, lower low, lower high, and the market continues grinding down until at one point you have a shift in the direction. You have a shift in the structure, right? And the shift means that instead of creating another lower high, which would just reverse here, the chart creates a higher high. A higher high than the previous one. This is what we call, I see a lot of people on X commenting and coming and I'm replying to every single DM, by the way, just so you know. But I see a lot of people comment, they don't quite understand the difference between market structure shift and market structure break. Market structure shift is when there's a shift in the structure. The structure is down, the trend, you can call the structure the trend. The trend is down. We're making lower lows and lower highs until at one point we're not. And we break out of the downtrend from the lower lows, lower highs, and we start making a higher high. And then the question comes, what do you do? And the answer is very simple. You wait for a pullback. This is what I explained. And this is why you pray. This is the praying moment, because if we break below here, this means that this was just a fake out. It didn't work. We got stopped. But if we get another push, this is a market structure break. We're not shifting the structure. We're up. It's an up structure. It's a trending uptrending structure. But we're breaking the previous high. And then once you have again the 4-point structure, 1, 2, 3, 4, you are ready to go. So what do we take away from all this? The market structure shift is the most important thing. Market structure shift happens when you have a higher high after a downtrend. This is what you want to trade. Why? Because once you understand that if you look at a monthly chart on Bitcoin, right? Or you look at let's get a 4-hour chart. This is a bullish chart. This is a very, very bullish chart. You have a massive, probably there will be a massive flush out, by the way, just so you guys know, but I'm heavy long because of this flush. But in general, if you look at this, this is a bullish chart. So you understand that there will be pullbacks. Of course, there will be pullbacks. But in general, you also understand that you do not want to short and you always want to buy when the internal downtrend shifts. What is an internal downtrend? Here, for example, if I go back here, I can see that on the higher time frame, you see it's a massive pump. So it's not even a question if we are bullish on the higher time frame. It's not a question. The question is that this internal dump that was probably like 5%, I don't know how long it was, 6-7%, when will this end and when can you actually buy in? And we're still talking about $1,000 portfolio. We're still talking about high frequency trading, okay? Not high frequency trading with the bots, but like higher frequency than just having a larger account. So what you do is you go down onto the 3-minute chart. Yes, the 3-minute chart. Yes, I'm telling you to go down to the 3-minute chart. And you identify the highs and the lows, okay? Here you see a high, then you see a low. Here you see a high, then you see a low, then you see a high. Then there is the new low is here. Then you see a high, then you see a low. And you identify these levels, okay? You identify these ranges. And once you identify them, you also want to see when a new downtrend happens. So like when there is a body break below, it doesn't matter if it's a wick, has to be a body break. If it doesn't break, well, this is not a new, maybe on the 1 minute, this could be a high or low, but it's not. It's not right now because we're still on the high, on the 3 minute structure, we're still in the downtrend. This is our range. And then we have a high, and then we have a low, and then we have a high, and then we have a low. So we're grinding lower like this until at one point we're waiting for the market to reverse. And we're gonna wait and wait and wait. I'm gonna go into the 5 minute. We're gonna see what happens here. We're still waiting, nothing happened, bam. We have a market structure shift. Why? Because the market broke out of the trend, both on the 5 minute, probably on the 15 as well. Yeah, on the 15 as well, but on the 5 minute as well, and on the 3 minute as well. We created a higher high. You see this because this was the range, and now we created a higher high. So the best thing you can do is take a long position here. Again, I'm talking about a lower account, so I'm talking about $1,000 account. And the most important is to understand that if you trade much more, you will be stopped that much more. And that means you will have to follow proper risk management, which I'm going to talk about in a second. But once you see a market structure shift, also guys, let me know in the comments. I'm going to look at the comments in a second. 1, if you have a question. 2, does this all make sense? 3, should I elaborate on anything else? So just make sure to get it in the comments and I'm going to look at it. So once you have a market structure shift here, you know that there is a reversal happening. Why? Because this is just a pullback on a bullish structure. So once you have a market structure shift, you want to take a position. Let's say here, you take your stop loss down to the end and you're targeting 1-to-1. Here is where the catch comes. Okay? Before telling you where the catch is and what the secret is, I do not advise you to trade high leverage if you don't understand risk management, okay? But I know that this is the only way to run, this is the way that worked for me to run a small account into a big account, taking high risk, okay? So when you're here, you're targeting 1-to-1. Why? Because usually when there is a market structure shift happening, at least a 1-to-1 on the chart is doable. So what you do here is you take a higher risk trade. That means you risk about 10% of your capital. That means if you get stopped here, you will lose $100 on a $1,000 account, okay? $100. But if you gain, you will gain $100, and then I will show you how you can ride the profits. So you take an entry here. Now, you also know that there has to be a pullback. I told you that we're always waiting for a 50% pullback, so you don't necessarily deploy everything there. You're waiting for the 50% pullback. You put the other 50% in here, and your average entry is about here. And you are waiting. You're targeting 1-to-1 on this trade. If you get stopped, you understand maybe this is going to be a stop. I didn't practice this, so I didn't look back what is going to happen here. So I'm just going to share with you what I'm going to do. This means that this was just a pullback to the previous high. That means that we got one stop. We lost $100 on our account, okay? Let's move on. We have a new range. We're still going lower. We have a high here. We have a low here. We're playing. Let me just go on to the 5 minute because it's going to be too slow here. You're obviously monitoring the markets. Okay, so we got a market structure shift again. So now we're down $100 and we have a market structure shift. What do you do here? Well, it's quite simple. You wait for a 50% pullback and you get in on that 50% pullback. You put your position here at the beginning when you have the break. Here, the market structure shift. You put your stop loss down here. You make sure that it's a $100 loss. It's not more than $100, okay? And you target the highs here. You target 1-to-1 or when we get a break. And you wait for the 50% pullback to happen. If the 50% pullback comes. Let me just go on to here. I just thought it was going to be much faster, but it's not. So you wait for first of all, you wait for either the break or the 50% pullback. Now you're waiting for the higher time frame break as well. just so you know. So you're waiting for this break as well. Let's see what happens. There you go. So you have the 1-1 here. That means that you're at break even. On 2 trades, you are already at break even. And you simply repeat. You go down onto the 5-minute chart and you wait for a market structure. By the way, this is the one that I think this is the one that we traded. This is why I told you to get in. This was a liquidation with the limit orders. But you wait for a market structure shift. Let me show you another example because this was after the liquidations. The market will be very, very slow. But when the market trends, for example, here, you see here, for example, we have this massive, massive dump. So the market trends up and you have a massive, massive, massive dump. You are waiting for a market structure shift. And this is the 8-hour. Let me see the 4-hour. You're waiting for a market structure shift. So all you do, come back here. All you do is you wait for a market structure shift on the lower time frame, right? So once you know that it's coming, you can just go down onto the 5-minute chart after this massive liquidation and map out what was your structure. So you go back here and you wait for the market structure shift. You say, okay, where is my top? This is my top. This is my low. This is my high. This is my low. You can consider this as a high as well. This is my low. Okay, so you are simply waiting for a higher high to occur. And then I'm going to go up on the higher time frame again. So we can fast forward, and then I'm going to look into the chat. What is happening over there? So you see, you get a high, you get a market structure shift here. This is the market structure shift. Therefore, you take an entry here. You target 1-1. You put your stop loss down here below these lows that was causing the market structure shift, and you target 1-1. Then you're waiting. Let me go up to the higher time frame, so it's going to be faster. And then you're waiting. That's all you do. You're risking $100 on every single trade, and you're taking partial profits on the top up there. Bum. You take, here's the second trick. Here's the second trick. You can either take 100% of your profit here and bank $100. So now I showed you 2 examples. Neither of them I knew what was going to happen. It was a dump. Now you see on 3 trades, you're up $100. Maybe you will lose 4 trades in a row, but then you're going to start. So based on the numbers game, you're going to make it back because when there's a market structure shift happening, at least a 1-1 occurs. But usually it is much, much more. What do I mean by that? When you achieve a 1-1, here's what you can do. You can go down onto the lower time frame and map out the market structure going up. So you have a low, you have a high, you have a low, you have a high. This I would not consider this. I would consider this as a low, and you have a high. That means I could sell 50% of my portfolio here and put my stop loss below this level. Why? Because if we break below this level, I know that the pullback will start, and then I'm going to go back to the lower points. So if I put my stop loss there, I'm just monitoring the market structure. That's all I'm doing. What is this? That's all I'm doing. I'm monitoring the market structure. And this allows me to basically trail my stop loss or take my stop loss higher and get much, much higher gains as if I would just simply get out of the market here. I'm just going to the 4-hour. Let's see what happens here. You see it comes back and retests the 50%. It comes back 50. This would have stopped us out here. So that's fine. And then I'm just waiting for what? Another 15-minute or 5-minute market structure shift, which I got here. I got a 15-minute market structure shift here. So I get in here, put my stop loss down here, and I continue the process all the way up until I have a decent capital to trade the second strategy, which is going to be a $10,000 strategy. I'm going to talk about this in a second, but I want to see what is happening here. Let me go here. Fefe wants us all to make money, pure legend. Thank you, thank you, thank you. But we keep losing, so they keep shorting. They make it so easy. Look on us. Everything. What is it? Big bullish candle breaking is sign. Yes, it is. And you can take the pullback. When there's a breakout, you can trade the pullback, wait for a 5-minute market structure. I'm going to show you a 𝗙𝗙𝗙 trade. I'm going to show you exactly how I tweeted about the 𝗙𝗙𝗙 trade. I'm going to show you how I played that. How do you decide to take profits? I just said 1-1, or you can just wait for a break. What's up, Fefe? What's happening? What's happening? This trading strategy is actually insane. It is. I'm telling you. And I'm telling you, it is. And you can go up when you start really understanding your strategy. You can go up to 20-30% of a stop loss. I don't recommend it, again, because I don't want you to wreck yourself. But once you make, let's say you use this strategy, you get to, maybe you risk 15% of the trade, but you have to be very picky with the trades you take. You grind it up to $2,000. Now you can have $1,000 to play with. That means you can double your stop loss and be like, okay, now I'm going to use $200 stop loss. And you very, very quickly can get to $3,000, $4,000. And then from there, you can go, okay, I'm going to use a $600 stop loss, a $500 stop loss. And therefore, you grind the account up from a very, very low amount. I've back-checked this as well. Good. Can you send me Solana? No, but I'm going to do a giveaway. Short Pepper now. I don't think it's a good... I think it's a good idea to short, but it's a bull market. I'm not interested in shorting. Tucker community strong, very strong. I'm going to talk about it. Got 40K, how to turn it into 100K this bull run. Let's move on to the second strategy. Which is also, guys, I want to give a word to our sponsors. Okay, so we've got a couple of sponsors on the channel, our partners for a long time. We have a lot of exchanges that are coming to us, and they want us to work with them. I personally test all of them, and we work with the ones that we like. Now we have a couple of partners. I have a couple of partners. One is CoinW. CoinW non-KYC, available worldwide. You get 30,500 bonus if you use the link down in the description based on your trading volume. You all tell me why there is no trade, someone has just wrote, do you want to give me Solana? Well, here is your opportunity to make free money. It's a non-KYC available worldwide website. You sign up, deposit $300, you get $20 just for depositing. You deposit $50, you deposit $500, you get $50. You deposit $3,000, you get $200. Literally just deposit and get it. The second partner I want to talk about is Zoomex. They are also non-KYC, available worldwide, great exchange. But the best part about signing up with them is that I'm giving away $500 every single Friday on Banter Plus if you sign up with my link in the description. I get your UID, you deposit $100, and I am giving away $500 every single Friday to 5 people. So $100 each to 5 people if you use my link down in the description. And now you can have a $30 bonus if you deposit $100. So now, only with these two partners, if you just do this, deposit $100 and sign up to these non-KYC exchanges, you have gained over $200 by just simply doing that. I'm going to talk about more of the other ones, which I also love. And okay, I'm going to mention VX because the reason why I love VX and the reason why I love, obviously it's a great platform, but you trade 0% maker fees. You do not pay anything if you trade on VX. That means if you took a limit order, it is free for you to trade on VX. Again, if you use our link in the description. I thought it was only for Black Friday, so I don't know how long it lasts. But there's a link in the description. VX. If you trade on VX using this link, you pay 0 fees on limit orders, which is quite crazy. So again, it's very important. I know a lot of you are saying, oh yeah, and the shield and all that stuff people are saying. And it's very, 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 very important to understand a couple of things. One is we have reach at Banter and we have the opportunity to work with these exchanges and get you guys the best deals. You can't get these deals anywhere else. The fact that you can come in here and you can get a deposit. If you deposit $100, you get $20, $30. It's unheard of. It's not normal. So like, use it. Use it. You can literally, just by looking through the links in the description, you can get, for example, look at Prime XBT. You can trade crypto and stocks and whatever, but you get 20% deposit bonus. That means you deposit $1,000 into Prime XBT and you get $200 back. It's completely beyond me. Why would people just simply not do this? Anyway, just wanted to tell you about our incredible sponsors. We work with them. I can guarantee you, I only onboard sponsors that I believe in, that I use on a day-to-day basis. It's very good. And we negotiated deals that you can't get anywhere else. Like you can't get anywhere else. This is super simple, genius advice. Thank you. You're welcome. You're welcome. It's literally free money, bro. And then the exchanges are good. Like they're the best out there. And some of them are non-KYC. It's incredible. It's incredible. Anyway, let's move on to the next strategy, which is the $50,000 strategy. Okay? Now, with $50,000, you do not want to take 10, 15% of your capital as a stop loss. Why? It's very simple. Because when you have, I mean, it depends on your lifestyle, of course. Maybe you need $50,000 to live, and then you need to reconsider stuff if you don't have that kind of money yet. But in general, I can say I genuinely believe that from $2,000, $3,000, $4,000, $5,000, most areas of the world you can live off. Okay? I'm not saying it's a comfortable life. I'm not saying it's like a big life. You can go to, I don't know, eat golden plated steak and whatever. But in general, from $3,000, $4,000, $5,000 you can live. That means you will need to make 10% of your capital trading a $50,000 account to be able to afford your living. And you can make much more with this with less risk. How does this work? So again, With a $50,000 account, I would think about using much more spots, because if you have a $50,000 account, that means that you are able to put that $50,000 to work and you can make a 4 or 5x comfortably this bull market. That means you can come out with $250,000 in the next 6 to 8 months. That is something I would much more consider doing, but I would do it in a way that I would take the $50,000 account, I would take about $15,000, so about 30% of the account. I would take it to trading because you can grind it up to like $50,000 or even $100,000. I'm gonna show you how. But I would take about $35,000, $40,000 and put it into spot. I actually have an incredible portfolio for you guys. So I shared my portfolio here. You can scroll down. Can we just pin the portfolio to the top, cuz? Or can we actually put this in the link as well? FFS portfolio. Can you please put it in the link? We'll find it here for you guys. But I shared with you my portfolio for this bull market, and I think it's really worth looking at. I'm just trying to find it, but I won't. Oh, it's here. So can you please just share it in the description? We're gonna put it in the description for you guys so you can see. But this is my portfolio. I do believe that this portfolio can yield you between 5 to 15x the next 8 months. I genuinely believe it. So it's here, cuz we'll put it in the description. You will be able to find it in like 5 minutes. But I think it's worth considering trading for a couple of reasons. One is because when you are in spot, you're subject to market volatility. That means that you are holding your, that means you're when the market moves down, you are subject to the down move. You will just lose your capital. You will not be able to reinvest it. Because if you trade, you're not subject to the market volatility because you have stop losses in place, you have risk management in place, and you know exactly how much you can lose. If the market is dumping 40%, you're losing 40%. If the market is dumping 40% and your stop loss is 5%, you only lost 5% and you have the remaining cash to buy the dip when the dip happens. So there's a massive, massive opportunity and advantage in trading other than using spot. But again, if you have a $50,000 portfolio, and it's going to be just the risk management that's going to be different with the 100,000 portfolio. What you want to do is you want to make sure to deploy most of it, at least 70% of it in spot, wait for it to go up, and use about 20, 25, 30, whatever percent is to trading, in my opinion. Now, how would I trade it? It's much more different because you have time. What do I mean by that? If you look at some of the trades I took, if you look at this Thai trade, for example, I don't even know where it is, but if you look at, I tweeted about, take a look at this Thai trade. 𝗙𝗘𝗙𝗙𝗪, also one of the best Solana AI plays out there. Incredible team, incredible project. But I'm also invested. But if you look at the trade, I took it's on 10x leverage, 500%. That means if you take an account of yours, right? If you take a $50,000 account, and if you take that $50,000 account and you put in maybe $5,000 in this trade at 10x leverage, right? That means you would be up so much so that you would be up 500% on $25,000. You would have made back the money that you took away from your spot portfolio to trading, and now you would have a $50,000 portfolio, and now you would have a $50,000 portfolio to trade with and a $50,000 portfolio on spot. That's how powerful this thing can really be. So let me show you how this is done. When you have a $50,000 portfolio, you want to wait. You don't want to go down into the 1 minute, 3 minute, 2 minute, 5 minute chart and try to figure out what will happen and liquidity sweeps and whatever, because it's just way too much noise for a larger account like that, for a medium-sized account. So what you want to do, you want to go onto the 4-hour chart, and this is going to be very, very similar with the 100,000 portfolio. The only difference is going to be risk. But when you go here, what you want to do is you want to wait for flushes like this. You want to wait for massive, massive leverage flushes like this when you can get a great entry on most of the tokens. Once you have that, this is one of the strategy, you wait. And when you have these massive liquidations, so if you look at this, for example, I told you, I've been waiting for this dip for a long, long time. I'm telling you on X, I've been telling you for a long time that this dip is coming. I've been telling you on my shows on Bento Plus. But if you look at this that happened here, for example, where is the... This is August. Let me go down and see the 1 hour chart. When did the flush happen? Oh, this is why I don't see it. This is August. This is why I don't see the flush happening here. So if you look here, for example, this is the flush that's been happening. So I've been calling for this flush from the beginning of December, 30% down on Rune. And the question really is, where do you get in, right? So when you have a flush like this, you want to start buying. Where do you buy? Well, on average, I can tell you that on bull markets in the next 6 months, I'm definitely sure we are in the bull market, you have about 20 to 40% dips, 20 to 50% dips on these coins. That means every 10%, you should have a limit order in to buy. What leverage do you use? You don't use more than 75% of your account or 70% of your account. That means if you have $10,000 for trading with the $50,000 portfolio, you will use about $7,000 to trading cross margin, and you leave the rest. You leave the rest untouched because you need that for margin if you want to add more. Of the 7,000, you want to make sure to deploy. You have enough to deploy at least 5 times. Okay. That means that when you have a 10% drop, you measure out the 10% drop from the top, you measure out the 10% and you deploy. You put in $1,200 here. Then the markets keep dipping at 3x leverage, right? You're at 3x leverage. Then the market keep dipping. Fine. What do? 20%. You buy more. Where is your average entry? Your average entry now is here. Okay. Then you just keep looking. Where is the market headed? Is dropping more. You can look here. We would have bought at, this is why I told you as well, because funding rates got flat, but you would have waited for a 30%, didn't come, fine. So your average entry is around here, but you're in 3x leverage. When these dips happen, so if you look at this dip, for example, you could have done the exact same strategy in October. Top, 32%, you would have bought here. You would have bought here. You would have bought here. Your average entry would probably be somewhere here, 3x leverage. If you look what happened since, it went up 50%. On 3x leverage, that's 150% within a month, Sam. So then you have another strategy where you do have the luxury of waiting out the dips, and you do have the luxury of waiting out the pumps because your account size allows you, because with this, for example, this trade, you deployed probably $5,000-$6,000 and you made 3 times what did you make? For example, here is your average entry. You made 50%, 3x, 150%, $6,000. You made $18,000. You made about $12,000 on this trade. On this trade alone, you made about $12,000 because you have waited. Now, guess what? Now your trading go down from the $50,000 account. It's not $10,000, but it's $22,000. But this is your trading accounts. You don't have to put it all back to spot because you took care of spot with that $50,000 that you had. Right? $40,000 out of that $50,000 or $35,000 or whatever you decide. Maybe it's 50-50. Maybe you want to resonate with this strategy and you want to trade much more with this strategy and rather hold spot. The reason why I like trading is because I know what's happening. Even though we had this massive dip, my spot backs took a massive hit. Massive hit. But I'm up about 100% on my trading account the past 3 weeks. Why? Because I waited and I deployed. And I deployed on all these dips. I deployed and bought the bottom. And I bought every 5% because and this is going to be the $100,000 plus portfolio. If you have a $100,000 plus portfolio, you can allow yourself to start buying in every 5%. And that means your average entry is way lower. So that said, circling back to the $50,000 portfolio and just summarizing everything. One is, you want to take the approach, you don't want to trade the 3-minute, 5-minute, 15-minute, hourly, yes, but you don't want to look at the hourly chart. You want to trade the flushes, the leverage flushes. And there is one more thing I wanted to add here, which is funding rate heat maps. So you can go on, this is CoinGlass, a completely free platform. You can just go in here, coinglass.com, and then you can write funding rate heat map, and then you will be able to find this. Now, when we this shows if you are getting into a position, you will have to pay funding depending on what dominates the market. If the longs dominate the markets, the funding rates are positive. The long position holders has to pay a fee to hold those positions. If the market is going down and the shorts are more, that means that the shorters will need to pay longers. Or the short position holders will need to pay long position holders. It's all automatic in the background, but what you need to understand is that the orange here shows you that the funding rate is getting overheated. That means that too many people are long on this coin. Now, guess what? If you go back to the last year, we saw the funding rates go up this yellow 2 times. When? Back in March, it was literally the top. March, April, and we saw it now, which was December 6th. Now, this obviously didn't get as heated as it got here, but this was a perfect indication that there will be a leverage flush. And if you go down onto the 2 weeks, you will see exactly that leverage is gone. There are no positions. There is no funding rate. It's completely gone. It's neutral. So when you had that, you understand that you should have deployed, as I told you, an X to actually deploy. So once you deployed everything, so once you summarize everything, if you have a $50,000 spot bag, I do think it makes sense to hold spot. At least 50% of that money should go into spot. As again, we'll link my portfolio down in the description. You can use that. You can use Rand's portfolio. You can use whatever you want. The $25,000, I think it's worth trading with because you can make money down and you can make money up and you're not subject to volatility. The way to do it, one, wait for flushes. Happens every 2 weeks. Every week even. You can play the 6% flush, the 7% flush, and just simply add to your 3x leverage positions. The best part is you can build these positions up. So it's not only that you can wait for the flush and sell. If your average entry is down here, this flush felt nothing, bruh. You're still up. So even if you have not sold and you're building these positions up, I do recommend you take profits always. But even if you have not sold, you would still be up about 100% of that portfolio because your average entry is down here. And guess what? When we're going to go into the parabolic phase and you go onto the 4-hour chart and you see where this thing is headed, and we're going to start seeing this, your average and there will be a 20% flush and everybody will panic here. What will you do? You will say, oh, my average entry is down here at $6. Well, I'll just simply buy. Where? Every 10%. Every 10%. I'll just add to it. And as the market reverses, my average entry will going to be down here. And you're building up these massive, massive portfolios, but most importantly, always take profits and you always reinvest your profits back to the tokens that you're trading. So that said, wait for flushes, watch funding rate, heat map, so you understand that the funding is gone, so everything is neutral and you can buy. Buy every 10% drip. Make sure that you don't pick shitty coins because shitty coins can dip 70%. Make sure that you're trading tokens that can. If you got a 3x leverage, that means that you need 30% drop to be at 100% loss. Now, I said that you should not use the whole account, therefore it's not 30%, but rather 60% the drop you need to get liquidated. But always make sure to use larger coins. You don't need to catch the small shit. You need Solana, you need INJ, you need AR, you need Rune, you need Bitcoin, you need ETH, you need trade these major tokens. You can trade WIF, you can trade larger meme coins as well. But make sure that you don't get liquidated, you're level-headed, and dream work, you're not shadow banned. And that you trade the portfolio up. And once you build it up to the level where it's like, again, $50,000, you treat it the same way. The only difference is that now you don't deploy $5,000, but you maybe deploy $10,000 in each buy. And at 3x leverage, you're going to have a $30,000 position at 3x leverage, and you're up at $100,000 position that you can ride all the way into the bull market. Guys, if this sounds good, I would truly appreciate if you did two things for me. One, smash the like button. I see that we have about 1,200 people watching and we only have 300 likes. Please, if this gives you any value, make sure to smash the like button. It really helps the algo, really helps me. Truly appreciate it. Also, let me know in the chat now if you want to see me more here on the channel and want to bring you more of these strategies, or if you have any questions. And now I just wanted to, before I round up and I start talking about 𝗙𝗘𝗙𝗙 because I have to address it, it's very, very important. Someone's saying loved it. That's so cool. That's I'm happy about Pepe about the dump hard. I think there will be a massive pullback on the market. Now, dump hard, I don't know, but we buy. Fefe is the best. Thank you. Thanks, Fefe. You're very, very welcome. I'm so happy that you guys resonate with it. Okay, cool. So, and I see the likes going up as well. I also like that. That's pretty cool. You can always wait for a market structure shift. It's always a confirmation. Being busy at work, haven't been able to see him as much. Yes, I was at holiday as well, so I wasn't here that much. So the question is, the white stock screener better? Is the white stock screener? What does that mean? Stock screener. I don't know what you mean. What about costs? How much profit to take? Always layer out. There is a 20% pump. Take 10% off, 15% off. If wait, I was sitting on cash for 2 weeks and I still made 100% of my account this month. It's not about you have to be in the market all the time. The goat always, thank you so much. Should I take profit on Link? I'm up 165%. So 165% at 5x. That means that the what was it? Well, it's here. So 165% at 5x. That means you're up about 33%. 33% on spot. Now, do you think the market will dump 33%? Maybe it will, but then you're back at break even. The question is, what is your strategy? Do you want quick cash? Keep the cash and deploy when the next opportunity comes. So you want to build up the position and just ride it up until the top of the bull market 5, 6, 7 months from now. Because if you want to ride it up, don't take profits. Don't take profits. I like to take profits, and I even tweeted that I took 25%. I'm up massively, life-changing money. Always, if you take profits, you feel like it's a lot of money for you. Take profits. Take 10%. There's nothing wrong with taking 10% because if it goes up another 2x, you will be very happy. If it goes down, you can redeploy anytime. Okay, and then you had the $100,000 portfolio. I see about 10% of you said that you have a $100,000 portfolio. It's the exact same scenario that I explained with the $50,000 portfolio, except one thing. I would only wait for the major dips. I would not do anything else. But when the major dip comes, I'm talking about, when I say major dips, I'm talking about this. I'm talking about these dips. This is a major dip. This is a major dip. This is a major dip. Like I would wait for these. This is a major dip. And I would deploy heavy. So I would go 3, 4x leverage, 5x leverage in some cases, depending on what token. I would pick 2, 3 tokens. Pick the big ones. Solana. You don't need these massive moves. Pick the bigger ones. Once you have these, deploy every 10%, deploy $20,000 and wait for it to start growing and build the position up. You can, with $100,000 doing this, I genuinely believe that you can pull out a $500,000 to $600,000 to $700,000 if you build up your portfolio and you are able to not take profits and just ride it out as it grows into the bull market. I genuinely mean it. The exact same strategy, but only work with the big dips. Don't wait for the small ones. Don't wait, or just take $20,000, play the small dips, and then deploy the $80,000 later. Less trades. I took 12 trades this month because that was the big dump, but I didn't take a trade, not a single trade. For like 2 weeks, I was sitting on cash waiting for this dip to happen. And in 3 days, I made 100% of my account because I was prepared and I was buying this dip. All right, so should we short 𝗙𝗙? Do not short the bull market, okay? Do not short the bull market. Guys, we don't have a lot of time to do all this, but what I really wanted to tell you is that you can go onto my X. I reply to every single DM. I read all the comments. Make sure to follow me on X. You can find me at 𝗙𝗙𝗙𝗦. There's a link in the description. And I also included, or Kaz also included the portfolio down here. Here, crypto portfolio and his X here. So you can click here and you can find it. Now let's talk about, I don't know if I reiterated that you can get, this is fucking crazy. Prime XBT is crazy, hey? First of all, you can trade stocks. You can trade stocks, but second, you can literally get 20% deposit bonus. You deposit $2,000, you get away with $400 by simply depositing money onto a non-KYC exchange that allows you to trade stocks. Absolutely insane. Absolutely insane. VX with 0% maker fees. Guys, this is the time to lock in. This is the time. You can, only from this section of the description, with all our partners, you're able to get $400, $500, $600 by signing up and depositing. And if you like the platform, stick around because I use all these platforms. I like all these platforms. It's worth trying them out. Okay, let's get into the nitty-gritty. Also, guys, does this make sense? Like, is everybody happy? Is everybody fulfilled? Does this make sense? Because it's like, yeah, it does. But he's a professional. He's teaching me now. Okay, long 𝗙𝗙. Yeah, long. You know, I thought about long 𝗙𝗙. I thought about how we could make that happen. But you never know. It's worth subscribing to the $1 Billion Hustle, guys. I'm telling you now. I can't tell you more. Worth following the $1 Billion Hustle. You can find a link in the description. This is my daily vlog or weekly vlog. It's down here. Subscribe to the $1 Billion Hustle. It's a weekly vlog. I share with you everything. For example, ayahuasca helped me become a thought leader in crypto. Let's play a little bit of this. Let's see. 7:45. Now I'm only down $7,500. You were in for a ride, bro.
And you put on the pizza and you say, okay, have a bite.
This is where the conspiracy theory starts. It's
how to not pay tax. Okay, cool. So anyway, you can check it out. There's a link in the description. Check it out. Appreciate it if you subscribe. Let me know what you think. Now let's talk about this because we have to. So we don't have to, but I want to. 𝗙𝗙𝗙. Here is the story behind 𝗙𝗙𝗙. If anybody doesn't know what 𝗙𝗙𝗙 is, 𝗙𝗙𝗙 is a meme, Tucker Carlson meme that came. I was the first one, actually I was the second one after Kyle, that discovered 𝗙𝗙𝗙 from the Banter fam. I tweeted this on the 3rd of April. So the TLDR, the token dumped yesterday massively, 75% in like five minutes, and nobody knew what's happening and if it's dead, and I get DMs and people are scared and whatever. So I tweeted this on the 3rd of April 2024, this year, okay? 3rd of April I tweeted this. And I said, I'm not chilling, this is not paid, I'm already up like 6x on this, and I do hold, I mentioned it on the show at 1 million. And I do hold this. I just genuinely don't want you to miss out. If you play the meme casino, get some 𝗙𝗘𝗙. This is literally the funniest and coolest shit ever. I'm checking their YouTube channel every morning. So this is 𝗙𝗘𝗙 is a meme that is creating content like this. It was the initial. Oh, it came a long way. But anyway, it's like 𝗙𝗘𝗙 wakes up and it covers news in a very funny and digestible way. And then I fell in love with the idea of 𝗙𝗘𝗙. I fell in love with the idea behind this meme. I didn't know anything about them. I didn't know the team. I just loved the content. I followed them. I didn't even get in touch with the team. And then I said, I'm committing to hosting a 𝗙𝗘𝗙 billion party. When it hits 1 billion FDV, the entry will be to hold 10,000 𝗙𝗘𝗙. This, by the way, still stands. But I said it was, current value was $260. And the value when I posted this on April 10th was $26,000. No, sorry. Value at 1 billion FDV, $26,000. So current value was on the April 10th, $260. Anyway, then I told Ren, and I was like, Ren, this is the fucking shit. Like, this is what we should be doing. Like, we should help these guys grow because 𝗙𝗘𝗙 is the largest crypto media company out there. We know what we're doing. We should help these guys make the best content on the planet. And he was sold on the idea, and he was very, very, very involved and helped the team. And then this happened. So I don't want to point fingers. It's very important. Some of you have seen that we didn't talk about 𝗙𝗘𝗙, that I didn't talk about 𝗙𝗘𝗙 that much. And the reason is because there was a misconnect. So 𝗙𝗘𝗙 invested we bought tokens on our own money, and we tried to help the project as much as we could. And there was a mismatch between the culture of the original dev and 𝗙𝗘𝗙. That's what really happened. And 2 months ago, the original dev basically left the project, and a new dev came in who did the animations, wrote the stories. For the past 2-3 months, this guy has been running the project, even though it wasn't like, didn't everybody know. This is what's been happening. So this guy has been completely running the project. The new dev has been running the project for the past 3 months, 2-3 months. And so we thought the original dev was out. Everything was fine. And yesterday, I came home from holiday and I see this. And if you look at the 5-minute chart, it's actually quite severe. So it's like this token dumped from 7.5 million in probably less than 10 minutes down to 2 million. So obviously someone was selling, and we were not the one selling. So we looked at the wallet, and it was the old dev dumping on his own community. So he left the project, he didn't contribute, and then he dumped all his tokens on the market yesterday. Now, what is interesting about this, or what is said about this, that he, after dumping all his tokens, he posted this in the Telegram group. He said, first and foremost, apologies for the radio silence during this time. There was radio silence because he wasn't involved. And I've been trying to work things out behind the scenes and ready to now explain what's happening. So I don't even want to go into details. You can you can stop it, you can read it. But the whole point here is that this guy has not been involved in the project for the past 2-3 months, and he was accusing 𝗙𝗘𝗙 for selling and this and that. Yet, he clearly dumped all his tokens yesterday. And people started panicking, obviously started panicking, which is understandable. But that, now looking back, and I know it sounds weird, I know it sounds bad, and I know I'm probably going to get a lot of hate for it, but this is one of the best things that ever happened to 𝗙𝗘𝗙. And I'll tell you why. Full disclosure, very important, and this is what I wanted to show you here. Full disclosure, I have tweeted about 𝗙𝗘𝗙. I have tweeted about 𝗙𝗘𝗙 down here. So you see my analysis on this. This is product KOLs. You can look them up. But you can come down to my X profile, and you can see that I mentioned 𝗙𝗘𝗙. And since I mentioned 𝗙𝗘𝗙, 95%. Okay? So if I go in here, you will be able to see when I tweeted about it first. And I scroll down here to the tweet, so you will be able to see it. When you scroll down here, you will see that this is the tweet that I put out. Now, this is the tweet. This is the tweet that I put out first. Yes, this is the tweet that I put out first. So we bought into the idea of 𝗙𝗘𝗙. We bought the token. Like I'm talking about myself, obviously. I bought the tokens. Now you're still up. You're still up about 150% if you bought it this time. But what is most important, that we tried to help the team create the best freaking content on the planet. That's what we've done. And after this guy dumped, what we were missing from 𝗙𝗘𝗙 is how we can involve the community much more. It's not like a cult meme where you are coming on and it's a cult meme like WIF or whatever. It's a proper media company that has the potential to create content where even Web2 partners coming in and advertise on the channel because it's consumed. Why you watch The Simpsons, for example, because you like it. Why you watch South Park? Because you like it. You can watch content, you can watch news in a very consumable way. That was the whole vision behind 𝗙𝗘𝗙, to create a media company. And so after this guy dumping all his tokens, he came in and he said that he tried to save it and this and that, and he offered it to the community. Now, it's kind of bad to see this happen because obviously people started panicking. But one thing I want to assure you is that this ignited a massive, I don't want to talk for Rand, I don't want to talk for anybody else, but this ignited a massive fucking fire in me. Because this thing has the potential it always had. It just didn't have the right team. And now, the fact that the dev sold all his tokens and is out, hopefully all his tokens, I don't know, and we can really pick this project up together with the community. Yesterday at 1 a.m., I spent 2 hours in the Telegram talking to the community. 150, 160 people in there. And I can tell you that I will do everything I can to help this project survive. Not because I have to. Although I think I owe it to the community. I owe it to you guys. You're up 150% if you bought it in the first time I said. But because I want to. Because I want to prove that the vision that we put forward as Banter can be done if there is right management and right leadership. So I'm going to dedicate my personal time on making this better. I'm going to make sure that this thing survives. I'm not urging you to buy. I'm not urging you to sell. You do whatever you want to do. I always said it's a meme. If you're up on a meme, you should take profits, whatever good meme that is. But I'm telling you that I am going to make sure that this thing recovers and thrives. Why? Because now I have a point to prove. Shout out to the LFGO community. Shout out to these guys coming forward and tweeting this pretty cool stuff. And I'm telling you, the party is still on. There's the official Telegram. If you have anything that you want to give to 𝗙𝗘𝗙, if you want to help it survive, if it gave you anything, if it gave you a laugh, we have very big names coming together. I can't tell you more now because honestly, I'm not even up to date since what happened yesterday that much. But I know that we have a lot of people that are openly supporting the revival of 𝗙𝗘𝗙. There's a movement happening, but I felt the responsibility to talk about it and tell you what I'm thinking. And I can tell you one more thing. I'll see you on this party. I'll see you on this party. Okay, guys, let me know what you think. Obviously want to. I think we're coming to an end here. But obviously, I want to make sure that you understand the risk that you're taking. If you want to come onto the journey, I appreciate it. If you support 𝗙𝗘𝗙 when it's getting a beating, I appreciate it. If you don't, that's absolutely fine as well. But I personally will want to make sure to do it. Because he's saying we should do a giveaway. We didn't even get 500 likes, bro. Yeah, we didn't even get 500 likes. Okay, LFG 𝗙𝗘𝗙, your market outlook. I think we're going to get a dump and then we're going to get a massive pump. Every dump is for buying. You're the man, Fefe. LFG, thank you. When will turbo pump? I don't know. Full support, brother. Thank you. What about base? Pepe, I don't know. Love your intentions. Fefe, Pepe. 𝗠𝗢, also this thing on 𝗠𝗢 is crazy. So I don't know. We didn't get time to do this. But I know John the man. Also, by the way, big ass shout out to John. If it wasn't for him, I might have abandoned it. 𝗙𝗘𝗙. This guy is an absolute fucking legend. He was also a very, very big help in the past 2-3 months for the team. But anyway, he's also very much involved now. And he said, look at a meme called 𝗪𝗙 on 𝗠𝗢. And this guy, you don't want to fade this guy. And then I looked at 𝗪𝗙. And this is like this 𝗠𝗢 meme, which is like the content is next level, what they're putting out here. I think it's gonna be very interesting. I bought into this token. It's at 20-something million. I don't know exactly where it is. I bought into the token. It made me buy because 𝗙𝗙𝗙𝗖 is also pushing it. He's also involved. So anyway, talking about 𝗠𝗢, I just Someone commented about Sui, and this was a thing. Okay, guys, truly appreciate every single one of you. I will update you on what is happening on the market on my X. And also, super important. Tomorrow I'm dropping a video here on this channel at the same time, which will be about a day in the Bente office. Okay? And that means that I'm going to show you from the morning to the evening on what is happening in the Bente office. It's not going to be live. Obviously, it's a pre-record, but it's coming this time. So if you want to see how the shows get done, how Randy is excited or stressed before his show, how the thumbnails being done, how everything, the studio is set up, how the office looks, how people work there, is going to be absolutely insane. So make sure to tune in here. Make sure to follow me next. Make sure to subscribe to the channel and come back every single day. We drop you the best of the best of the best. And if you are rewatching this, make sure to check out these 2 videos. Click here to subscribe. And yeah, I truly appreciate every single one of you or the support. Thanks for watching. Thanks for being here. And I believe I'll see you in the next one. Take care. And button. And broadcast. Let's go.